Good afternoon, ladies and gentlemen. This is Clarity Trading Frank, and here's a real-time live trading screen recording for educational purposes for Clue Estate members and traders. So this is where we are right now. Here's your uptrend line. These are the downtrend lines or channels. This was a consolidation channel that it broke out of back on the 14th. Wow, that was just yesterday. And we traded these very successfully. Here was the a ramp up at 3 p.m. Very sharp candle reversal, which was doing fantastic till 4 o'clock. Then came the Comey, I'm sorry, Comey. Yes, the Comey investigation by Bob Mueller and possible obstruction of justice for charges against President Trump. These are still rumors. Nothing has been officially announced by the FBI, by the special counsel or the Senate Intelligence Committee. So markets are obviously fearful. President Trump has tweeted out that he feels that it's completely unjust and it's a witch hunt. Whichever the case, here was the, here was these are the after hours that starts here, right there. Pull back, futures pulled up a little bit around 8 o'clock, and then fell back, and then we gapped down big time, 16 points on the 16 handles on the E-minis, and there we came down, jostled around, profit taking, sharp candle. We played that, then pulled back, created a sharp reversal hammer right there. And from what we have seen over the past couple of years, if not the past couple of months, volatility, algo HFT reversal hammers of this magnitude, followed by expansion candles, is a bullish sign. And just to keep in mind that bullish pattern, this one that we are seeing here after the volatility cluster, the big move up to test the previous lows, yesterday's lows at 3 p.m. You found resistance there, pulled back, pulled up again, hit the downtrend line. This is the downtrend line. You can see that it's all clear. And hit the downtrend line exactly right there, pulled back, tested the uptrend line, and staying above for now over the 3 p.m. low of 24.27 from yesterday. Now this pattern will get into some heavy volatility as we cross 2 p.m. We have crossed 2 p.m. It's approximately 2:19 p.m. Eastern Standard Time right now. And we could very well fall down here and test this low here from 1 o'clock or 12:45, and and then move from here. Or if the market really wants to create another double bottom, then we're going to fall rather rapidly, test this, move around here a little bit, and then fall down towards 24.16, 24.17, and create another dragon bullish pattern. Okay, patterns repetition is standard procedure for algorithmic high frequency trading black boxes. You don't make these things up. This is the reality of trading. This is the modern reality. I know a lot of traders, new ones, old ones, don't want to accept it, but it's machine driven markets. That's it. There's nothing to it. Is it easy? Absolutely not. Is it great when you do tactical setups based on all these levels and then basically shoot the fish in the barrel over the next 24 to 48 hours? Absolutely. Chasing the market at these levels is a fool's game up here. Chasing the market down at these levels, down here, and at these levels is good because you can lower your cost average, you can put some monies in there, and again, I've shown we could come down here, we could possibly come down here, or we could possibly test the day's low on a flush on the margin sellouts at the end of the day. If this breaks, then that's a different story. That means that there is some heavy duty pressure in the market. Not that the Dow is down 32 points after being down more, I think at one point more than 100 points. So we have reversed about 70 points. And if we continue on this path, as the Bollingers are showing, as the gap fill magnet is showing, then you're going to have a big short squeeze where the Dow is going to be up about 50 to 60 points. I've been doing this for a while. What can I say? If I can survive, anyone can survive. If I can do well, anyone can do well. But they have to be focused. They have to be tactical. They cannot let their emotions judge their trading decisions. And more importantly, you can't have You can't be waiting for perfect moments because the perfect moments, as we have constantly seen, happen on the most panicky moments. Case in point, last Friday. Look at that. That wasn't a couple of days ago. I mean, that was not even last Friday. Last Friday was this. I'm sorry. And I've shown some multiple charts on that. Yeah, this was last Friday, right there. So let me highlight that. So here was last Friday. No one touched it. I was a buyer. You got a reversal candle like this. This is a smaller one, but damn good. Immediately shot up. You know, you took some very fat profits, 100, 120% on the intraday moves, on the weekly options, on the S&P 500 or other high momentum stocks. Then you had a drift down and created a double bottom. Well, this was over the weekend. And then you opened up on Monday at around 9 p.m. right here, sold off hard, created a double bottom. We played these moves. Now, you can't play every single move because that's you can, but it's going to, you need real fast speeds. You need to be an active trader like myself, and I don't even do that all the time because once you create the double bottom, you do a nice swing setup, and this is where you sell, and you make some significant money. Okay, you make some significant money. Then you have a minor pullback um, on the 13th, and then you ramp up and hit that 2439 level. You're talking about 200+% type of moves, if not more. And we did that. Then there was another consolidation and then a move higher where the market basically came close to testing the 2445 level. These are the E-minis. Okay, so on the E-minis, the 24, we almost got there, didn't quite get there, fell back, doing great yesterday. Then come the Mueller possible indictment, charges against President Trump. Pick up the story from there, right? So volatility trading requires a certain type of mindset, and most traders don't have it, but they can develop it. That's all I'm going to say. So here we have a nice fat candle developing. We are entering the bear kill zone, which is basically right here within this gap right there. And if we go through that, we're going to hit that 24. We're going to hit that 2433 level today because it's only 4 points away. This is a 15-minute chart, so you're seeing more of the details, and it's pretty clear. So the key to successful trading is not being comfortable and easy stuff. The key to successful trading is to really play these levels or set up for a nice bounce back, because this to me looks like a pretty solid bounce back towards where we were yesterday at the close, which would be here. So do a little extension. And at this point, when traders try to get in, they're going to get whopped. There's going to be a pullback. Test upper end of the gap. And if the market truly wants to go higher, then it's going to move like that. And that will create a large head and shoulders with the head down here, with the left shoulder here, a right shoulder here, and then the neckline. Is it possible that the market can make a new high by next week? Absolutely. We're just around the corner. And what can I say? That's pretty much it. So we'll see what happens. I'll leave this video on for a bit. It's 25 minutes. It goes on for. I recorded yesterday too, and these are great visual exercise and in perfecting your tactical trading skills. Thank you for listening and keep watching. Good afternoon, ladies and gentlemen. Here's a chart of the Russell 2000. This one is obviously doesn't look like the S&P 500, but then at the same time, this is a 1 hour chart, and you can clearly see here that it's a very structured range trading situation. Here was your neckline breakout right there. That's exactly what we tested. That neckline breakout was tested on the 6th, and I guess one of my dogs didn't like the Russell 2000. I'm just kidding. So bottom line is like that's what it tested. Then we have a large reversal. Then we pulled back, but we didn't make it a bearish engulfing. Then we didn't make it a bearish engulfing. In which case, bear with me one. Sorry about that. I had to tell one of my dogs to stop getting emotional and just look at this market in a very tactical fashion, right? So he stopped barking. So bottom line is that that's what we're doing. Again, very algorithmic trading, no easy answers, but then at the same time, it's not crazy difficult either. What we do need to do is, we have you can see here when I draw this line, and it's very clear. I joined a couple of points here. You can see here, let me make this line a little bit lighter. There we go. Okay, so we're broken past that, and at this point, the key that it needs to break out over is 1416. Once it does that, then you have then you have a possibility of a nice move once you move out of here towards this level. Russell 2000 moves in increments of 10 points roughly. So from 1408 to move up towards the 1420 level is basically not that much of a stretch. These things happen rather quickly, and you have to be positioned earlier, as I've mentioned in my previous video cast, that if you're not set up earlier, like this here, for example, or even this type of pullback, it's pretty much the same stuff going on here, then you will never going to catch this type of move. Never. Just the way it is, because you're not going to buy here. Knowing emotional human traders, they're not going to chase these candles, even though I do, and I instruct people to do it, but some do, many don't. So the same stuff. Is it possible that it completely breaks down? I don't think so. Russell 2000 is basically predicated on strong economic numbers. So far, the economic data coming out is strong. And Janet Yellen yesterday also very clearly mentioned that U.S. economy is on a strong footing. That's the reason why she raised rates, and they're going to have a balance sheet reduction, but they're going to start ridding off all those bonds that they bought slowly but surely, starting in September. Uh, so so that's basically it. All right. So we need to break that, and it goes here and possibly test the 1432 level. But you can see the pattern symmetry. I see it, and I try to help other people see it. Is very much in play. If you want to look at it like that, you can draw. Here's your upper end of the range. Here's the lower end of the range that we got tested. Here is the mid range, and you got the gap fill. So all these are going to be met over tomorrow, if not by Monday or Tuesday next week. And so far, look at the Bollingers. That's another thing you should notice here. Look at the shape of this Bollinger. To a lot of traders who are not used to technical analysis or pattern recognition, to this is like all like funky stuff. But hey, it works. I set up well, take some really, really nice profits. Suffer half a day of pain or a day of pain, so what? You get fantastic prices. That's what bargain shopping is all about. Okay, you buy them cheap, you sell them when the rest of the world wants it, as they're chasing higher prices, and it's really as simple as that. But simplicity is not a common occurrence to retail traders because they like to think simple, but they never act simple or tactical. So anyway, it could also possibly come down to this level here and test this very large impulse breakout level, which is around 1394. I'll be a willing buyer at that point, or we can move here. I'll be a willing seller at these zones here, at these zones here. All right. So that's your Russell 2000 in front of you. We got roughly 5 minutes left on this video cast. I think it's very instructional with my commentary going on. And I think people who like to really learn, and what can I say? This is it. Can't get any better than this. Clueless Trading. Not just trading alerts, not just charts, but actual online real-time trading during a nice red day. Thank you for listening. Keep watching. Now, this chart was also shown way earlier. I just switched on the screen, and you can clearly see that it's heading that way. Retail traders who are not tuned with tactical trading basically call it chop. We call it opportunities between levels, actual technical levels, and numbers to make a lot of money. So today alone, intraday traders could be scalping and doing a lot of nice trades. Not a heck of a lot, just a couple. You can see what's going on here. Okay, this was the Trump FBI Black Swan Gap Down Futures, which opened down here, right there, right? You can see that. All the way from here where we closed at. There we go. And this is what we do. There's the volatility cluster, lots of back and forth, margin selling, this and that. Once the margin selling dies down a little bit, you get a reversal hammer. Panicked retail traders have sold almost all their stuff. They're just sick and tired of the market. They can't make money. And boom, the market takes off. Same thing's happening here. So, stair stepping up. Now we have entered this bear kill zone right there. And this was where the futures basically had reversed at around 8:30 last night for people who were watching. I mean, I watch the futures all the time. Sometimes in my sleep too, actually. Just kidding. It's right in there. So any type of move higher than we were a few minutes ago over 2430 will cause a quick sharp ramp up. Now keep in mind that going back, this is the second downtrend line. This is the first one, right? If you're looking at it from bottom up, and this is the third one. And we are heading towards the second DT line, as we like to call it, right there. Few seconds left on this video. I'm going to switch back to the other screen. See some little selling here, and there we are. So you're going to see a lot of volatility between now and 3:30, lots of margin sellouts, stuff like that. So standard procedure, but the trend is looking good. Thank you for listening.